So the infinite banking concept, what is it? It's the process of you taking back the banking functions in your life. And you know what? It's gaining a lot of traction. Since the late R. Nelson Nash pioneered this in the late 90s, the infinite banking concept has changed millions of people's finances. And in changing their finances, it's changed their lives. But the one thing that we gotta discuss today is the infinite banking concept. What is the first thing that comes to your mind? I'll bet a lot of you it's a product called whole life insurance. So that's great for North America, but what if you don't live in North America? What if you're not in the United States of America or Canada and you see a video and you're like, oh my God, I wanna do that. I wanna take back control of my money. But then you're like, oh, crap. In South Africa, we don't have whole life. Oh, in Australia and UK and so many other places, they don't have whole life. Their government doesn't allow it. So they just throw their arms up and like, oh well, guess I can't do this. Wrong. My name's Chris Naugle. This is What Now, What's Next, and we're gonna tell you why you're wrong. So I was thinking about this. How could you do the infinite banking concept if you don't have the machine, the specially designed and engineered whole life? If it's just a process, if the infinite banking concept is nothing more than a process of you taking back control of your money by you taking back the banking functions in your life, is it really necessary to have the machine, a specially designed and engineered whole life? Well, that draws a lot of questions. Because when you really look at the infinite banking concept, the whole life plays a major component in it. Because the whole life allows you a place where you can put your money and allow your money to earn uninterrupted compound interest. In other words, I can put my money in the whole life, take the money out in the form of a loan, which is actually the insurance company giving me part of my death benefit early. They'll loan me my death benefit while I'm living, and then I get to use that the way that the infinite banking concept teaches, and then I can recycle and recapture all the money back into the specially designed whole life as a loan repayment. You've probably seen my videos, that's a circle. The money starts on the left, goes over to the right side, that's where it goes to work, debts, cars, finances, anything you want to do with it, lending, real estate, and then whatever that money earns or takes back comes back to yours. Now, if you don't know what that is, then pause right now, subscribe to this channel below, and click that little alerts button because you're definitely missing out on a lot of great stuff teaching you what that is. Let's take a step back and let's discuss, do we really need the whole life? Well, if you have it available to you in the United States or in Canada, the answer is undoubtedly yes. You don't want to use anything else. But if you're in the UK, Australia, South Africa, any other place that I have found, you probably are saying, well, Chris, tell me there's got to be another way, so let's do this. So if we're really going to do the infinite banking concept, the IBC process, how do we do it without this awesome specially designed whole life where it earns uninterrupted compound interest, your money stays tax-free, it's protected against judgments and liens, earns a guaranteed interest rate plus dividends, and on and on. You're probably thinking now that I just said that, well, yeah, we want all that. But if you don't have that, what else can we use? Well, most countries have checking accounts, okay? Most countries probably have access to some form of money market fund, okay, or money market ETF. I mean, there's all sorts of places where you can put your money. They're all market-based or bank-based, but where you can put your money where it has liquidity. So the number one thing we need to make sure that we have is liquidity. If you're going to do the infinite banking concept in one of the countries where you don't have access to a whole life insurance policy, well, we got to find a place that provides liquidity. And most of you are thinking, well, my checking account does, but that's exactly what we're trying to do, is get away from the banks. Exactly. Except for you can't get away from the banks. Your government, your country doesn't want you to. And, well, that could be said for every country, but you know what? We might have to play their game, but play it on your terms. And money markets. You all have access to some form of a market. It might not be the US stock market, but it's your markets. You have some type of an exchange where you could find money market funds. You could even find all sorts of different bond type money market funds where bonds are giving you a slightly higher yield. So now let's talk about one other thing. that we're gonna really have to think long and hard about. And I'm gonna have to take this audience, all of you watching this right now, I'm gonna have to split you. One side is gonna be the average person making an average wage, and the other side, I don't mean to do it this way, but you're gonna be the ultra wealthy, the people that have at least 500 to 5 million in assets that you are investing, because that's gonna change the game. You see, I have other things we can do for that group than I can for the rest of you. But let's talk about the second thing. We need to make some type of interest on that money. But you see, with the infinite banking concept, the goal would never be to keep the money in the checking account or the money market or this bond money market, because we want to move that money. The goal is always to keep that money moving, okay? So we gotta look at the interest and we gotta write a word. So that money has to be moving. So if we take the money out of a checking account, out of a money market, or out of a bond money market, if you take it out, this stops. So if you start with, let's just say $10,000 in any of these, and we take and move $10,000 over here to make that money go to work, what happens? Well, this one goes to zero, because if you take 10,000 out, you now have zero. So that's where the whole life really benefits you, because if you had a whole life, the 10,000 still earns interest even though you're using the money. But again, we don't have that. So the third thing we want is we want to try to have some type of tax advantages. So if you got vehicles in your country that might have specific tax advantages, that would be advantageous. But again, this might not be an option either. So really, if the only thing that we have out of those three things in your country is liquidity, well, let's just play with what we have. So let's go back over here and let's just assume that let's start with the basics. We're just gonna use a bank checking account. Now, for most of you, you're thinking, well, that sucks, it's boring. Yeah, well, not doing this is really boring too. So let's just say every single year we put, and it can be any number, but let's start small. We put $10,000. I don't care how you put 10 grand in there. It could be $833 a month. It could be 10,000 a year. I don't care. But just set a systematic, let's write this down, okay? Let's start systematic savings. This is very important because with the whole life, you'd have to do this. You have to continually make premium deposits. So if you've got a checking account, here's what I want you to do first and foremost. I want you to open a second checking account for this, all right? A segregated checking account. The only thing that checking account is going to be used for is saving money systematically and this process. Nothing else goes into that checking account. Are we clear? You can't use your regular checking account that you're buying Starbucks and coffee and going out to eat and buying diapers. That ain't gonna work, folks. I don't care how much you think it will, it's not. So we're gonna set up a segregated account. And again, I don't care if it's a checking account, a money market, but that account is only to be used for IBC, okay? So if you don't set up a segregated IBC account, then don't go any further with this. If you think you can do it with your regular checking and regular savings, I think it's gonna fail, but maybe you prove me wrong. So we gotta have systematic savings, 10,000 per year or whatever dollar amount you want going into that 10,000, a million, 10 million, whatever. And then now the goal is to take back the banking functions in your life, okay? So follow me. Before, with the IBC concept, what we would do is we would always start with paying off debts. Now, I don't care what country you're in, you more than likely have credit cards, okay? You more than likely have lines of credit available. You more than likely have car loans that you're taking out and all sorts of other loans. So right out of the hole, we got all sorts of opportunities to now make money using the infinite banking concept. So we have this segregated bank account over here that you've saved up 10 grand. And over here, let's just start with your credit cards. Let's say you've got a couple credit cards. You got one for 5 grand, one for 3 grand, and let's say one for 2 grand, totaling $10,000 in credit card debt. And each one of these is gonna carry a different interest rate you're paying, 15, 20, 29, whatever it is. And you're making a minimum payment to all of these. So if you had 10,000, let's just say your minimum payment's $250 a month. Folks, I'm just making numbers up, but this $250 a month is 100% interest that you're giving away to the credit cards. So let's start over. We're gonna go to this segregated bank account that you set up. and we're gonna take 10 grand out, okay? And here you can see I got a segregated account, but we're doing the same thing. And we're gonna move it over here, and we're gonna pay these credit cards off. Now, if you had 10 grand, we're gonna pay all 3 of these off. And in paying all 3 of these, you freed up $250 a month. So you got $250 a month you were giving away to the credit card companies, and normally most people, when they pay credit cards off, they stop there and they're like, oh, thank God the credit cards are gone. And then they rack them right back up. But here's how you're not gonna do that. You're gonna take the $250 a month you used to give to the credit cards, which was actually an average based on the numbers I used, 15, 20, and 29%. You are averaging 21.33% that you're giving away. And all we're gonna do is we're gonna take that $250 and we're gonna put it back in that segregated bank account. So each month, you got $250 replenishing the $10,000 you took out. Now you're not earning any interest on the $10,000, but you just took back the equivalent of 21.33%. You're doing pretty good. So let's continue on. We paid all the credit cards off. Now you got an extra $250 a month going over here, which works out to be $3,000 a year. But each year you've committed to being systematic, consistent and persistent with saving. So you're gonna put another $10,000 in the next year. Plus, you've saved $3,000 by not giving this money to the credit cards. So the next thing we're gonna do is we're gonna go to that pesky car loan. And let's just say you owe $15,000 on the car loan, 5% interest, and the thing is $500 a month. Now over here, you put 10 in, you got 3,000. So what we're gonna do is we're gonna take that 13,000 now, and we're gonna take it out, and we're gonna basically pay this car loan down to now, well, if we paid 13,000, we got 2,000 left. There's no recapture that's gonna come back. So now you only got the 250. In less than half a year, we're gonna then take the $2,000 out that you save up from the 250 a month coming back, and then we're gonna fully pay off this car loan. Now, when the car loan's fully paid off, we're gonna repurpose that $500 a month, which was another 5%, and we're gonna then send that money back over. So now, we don't have $250 a month, we got $250 from the credit cards and $500. And if we keep doing this, we keep going all the way down your debt stack, eventually, all your debts are paid off, and now, whatever that dollar amount, you have all of that money coming back over here. Now we're saving $750 a month. That works out to be $9,000 a year plus the 10. So now you're saving $19,000 every single year. And out of the $19,000 you're saving, only $10,000 is new money. The rest is money you used to give away. So now we've got a decent amount. Now we got $19,000. So what are we gonna do next? We're gonna look for additional opportunities. And these opportunities are just gonna keep going and going and going. So it doesn't matter what they are. Let's just assume that first you're gonna buy a piece of real estate. You wanna buy a rental. Great. Well, you got $19,000. So figure it out. If your banks require 20% down, this might be the 20%. So we're just gonna keep repurposing that. And then we're gonna take the rent, the net rent roll, okay? So that's the amount you keep after paying everybody else. And now we're gonna take that and we're gonna put that back into this account. So now instead of 9,000, who knows, it might be 20,000, it might be 10, it might be 15, whatever. We'll just make numbers up. And you just keep doing that. You see, you've got your consistent 10,000 you're saving, plus all the money that you're generating by paying off debts and recycling and recapturing, then repurposing that money to the next opportunity, the next opportunity, and the next opportunity. You are, in fact, doing the infinite banking concept because you're taking back the banking functions in your life. You're no longer giving $500 a month to the car finance companies or the bank that gave you the money. You're no longer giving $250 a month to the credit card companies that you were just graciously giving the money to them and they never even sent you a thank you card. You're the bank now. You're only using this particular account for your banking activity, and it just keeps growing faster and faster and faster. And eventually, when you have a bunch of money, you can then move to the next phase. So I'm gonna finalize and finish with this. Now, let's just assume you've got $5 million, okay? I'm just picking a number out of the sky. Your brokerage account or wherever your money's held will determine this. If you got $5 billion in a brokerage, Now, I'm just in the US, so let's just pick Charles Schwab. You can pick whatever one you have in your country. So whatever brokerage your investment assets are at, you probably have margin. So we're gonna just come up here and I'm gonna write margin, okay? Margin means that the brokerage will allow you to leverage, so number one word, leverage. We can leverage your brokerage account. Now to do this, you have to have a higher balance. Each brokerage is different, so I don't know what yours is, but in order to get a margin account that gives you check writing, because that's what we want check writing ability, you're gonna have to have a bunch of money. But they're gonna allow you to leave that $5 million in whatever account it is, in whatever investment it is. So let's just say this $5 billion's earning 7% a year, or actually, let's just make it like the policies. Let's say it's earning 5% in a very stable bond portfolio that doesn't fluctuate much with market conditions, because you want to be careful. So you got 5% on 5 million that's earning, but you've got this margin check writing account. So here's what we're gonna do. Everything you just saw me do, we're gonna then use the margin. And we're then gonna come over here and we're gonna find those opportunities that we talked about a second ago. The real estate opportunities, the lending opportunities. You see, now our money can earn money twice. You can earn the 5%, you can use the margin, and the only thing we have to do is they're never gonna let you use margin without charging you interest. And about right now, here in the States, your country may be different, it's about 6.5%. So what the name of the game in the infinite banking concept is spread. We need to make a spread. So if it's gonna cost you 6.5% to use the money that's in this brokerage account, then we gotta find something to put this money in that's gonna make north of 6.5%. So if you're gonna put it into real estate deals, well, just make sure after you do your numbers, it makes more than 6.5. If you're gonna lend it, we lend it 12% over here. So right there, that's a nice spread. If it costs you 6.5 and you make 12, awesome. And then what we're gonna do is all this money that we start making, we're just gonna call it the spread. We're gonna take that spread and we're gonna keep putting it back to pay down the margin, which is very similar to using the specially designed and engineered whole life for the infinite banking concept. And in doing this, you're making money twice. You're making a spread, plus your money never left the account and it continues to earn an interest rate or a return. Do you see what I'm saying? I just broke it up into two different types of people, okay? I don't want to call it the average person, but the person that doesn't have enough money in a brokerage account to go out there and get that check writing margin account. That would be the high net worth individuals. So you now both have a way to do this. Even though the specially designed and whole life would be nice, but since you don't have it, don't give up. Too many people are like,
oh, I can't get that whole life. I'm just gonna give up. Oh, guess I can't do this, I'm out.
You're not gonna do that. You're gonna think out of the box. You're gonna become the bank. You're gonna take back control of your money, but you're still gonna utilize their accounts, but we're never, ever, ever going to leave much money in that pesky bank account. You see, we're gonna put it in there, but then we're gonna send it back out to work. And that pesky bank account is only a segregated bank account. It's a new bank account. The only thing you're doing with it is the infinite banking concept. Folks, listen, if you don't live in North America, you don't live in the United States or Canada, this might be your only opportunity. And I'm sick of getting the Instagram messages, the Facebook messages, the TikTok messages, and all the comments on YouTube. Does this work in my country? And I don't know why, but it's South Africa a lot, it's UK a lot, it's Australia a lot. So let's just pick on them. Guess what? The answer for the whole life is no. The answer for the infinite banking concept is yes. And now you have the path. Folks, I hope you enjoyed this, and if you do, make sure you subscribe to this channel right now by clicking below. And also, see that little alerts button? Yep, that one right up top. Smash that alerts button so you're notified every time I do a new video. And if you liked this video, check this one out. How I lost $534,000 on the infinite banking concept. You'll love it. We'll see you next time. I'm Chris Naugle. This is What Now? What's Next?